What's up, guys? Welcome back to the channel. We are trading is made easy with high level of clarity. And as we all know, today is Sunday. And Sunday we do top-down analysis and give buyers on what to expect in the market. And today we have few pairs that we run top-down analysis on. And today also we'll be talking about the language of the market, where the market talks, when it talks, and where it talks, which is very essential for every trader to know, because despite the market is open for 24 hours, you're not expected to be trading for the 24 hours of the day. So this is a video you wouldn't want to miss. Stay with us to the end of this video, because at the end of this video, you will maximize your chance of winning in the forex market. Without wasting time, let's begin. And today we are starting with EURUSD. And when you look at EURUSD, let's start from daily. When you look at it, you will discover that this market is still in bullish movement. By the way, I covered EURUSD when it was here, explaining all the reasons why we should be expecting this movement to the downside. And when EURUSD was here, I explained all the reasons why we should be expecting this pullback before any other thing. And for some time, Euro has been respecting our analysis. When you look at this market, let's start with little deep top-down analysis. When you look at this, if you've been on this channel for some time, whenever market is moving to the upside and this market created high without this low sweeping any liquidity, sooner or later it will come to take out all the internal liquidity before moving to the upside, and that's what Euro is trying to do currently. And when you look at it right now, you will discover that this low, right, created this break of structure today upside, and after the break of structure it gave us this low, and this low created this particular high without this low sweeping any liquidity. What happened? Market came back, taking out this low, giving out this low, right? And this low, we are now taking it as liquidity sweep. This is a valid break of structure, by the way, and this is what we call fake break of structure. So how do you identify fake break of structure? When the low did not, when the low or high did not sweep in any liquidity before the break of structure. So this is it, and this happened now to be our valid break of structure and a very strong low, because this low swept liquidity before breaking this structure to the upside. So now this is a very valid break of structure. So far market remains above this low. That means we are still on bullish movement. We can only consider this market to be a change of trend when market comes below this and close below it. So despite everything we are seeing, all this move, we are still on bullish movement. So when we are in bullish movement, what do we expect? We expect to continue looking for continuation to the upside. Now, when you look at this, we discover that after this break of structure, the market came down to take out all the internal lows, right? Coming back to this fair value gap that we are seeing here, and reacting heavily from there and continued moving to the upside. So having all this right now, what do we expect? We expect more continuation to the upside. So what do we expect now? Now let's zoom to this particular place. This is kind of giving us bias on what to expect right now. Remember, higher time frame give us bias on the direction of the market. Lower time frame and middle time frame gives us the clean entry and the current situation of the market. So since we have used our daily time frame to see everything happening, what do? Then we now move to the lower time frame, which is 4 hours. Now on 4 hours right now, what do we see? We can see now that this market has moved from creating series of lower lows and lower highs to now creating higher highs and higher low. By the way, when the market was here, I explained all the reasons why we should be expecting more sell to the downside, at least to take out one low or at least two before more continuation to the downside. But the market reacted more than our expectation, taking out all the internal lows, coming to this order flow here, right before continuation to the upside. Coming to this order flow before continuation to the upside. So this gave us a good entry to the upside. Currently, the market is now creating higher highs and higher lows. When the market is creating higher highs and higher lows, what do? We now try to look for opportunity to continue and join the trend. So Having said this, what are we expecting? But before we give us what we're expecting, let's quickly go to monthly. I want us to see something on monthly. Now, on monthly, when you look at this, we discover that this market is going somewhere, right? Where is it going? It is coming to test this monthly order block, right? And when you look at it, that monthly order block has a fair value gap. And whenever you see any order block with fair value gap on daily or weekly or monthly or 4 hours, that order block tend to be very, very strong. So the market is trying to move over to that place to test that order block, because on monthly here, we don't have any valid order block at this particular place. So the market is trying to go and fill that order block before we start seeing more continuation to the downside, considering what we are seeing on our DSY, which we are going to look at very soon. So since we have this right now, when we go to weekly, you will discover that this thing happened to be our very strong low, right? Because it swept liquidity. So we are not expecting the market to go below it. So having seen all this, and as you can see on weekly, it is creating higher highs and higher lows. So let's go back to our 4 hours. Now on 4 hours right now, what are we expecting? Now, as you can see, we had a market that ranged at this particular place for a number of time, and whenever a resistance is broken, it turns to support. So this market has been tested, but I think the market might still be coming back to this particular zone to test it before we start moving to the upside. So having this in mind, let's now drop down to 1 hour. Now, which means in this particular place, we are now looking for a very good point of interest at this particular place, because this is the last resistance broken, which we know that has high probability of turning to support. So when we go to 1 hour, now let's start looking at it. Everything seems quite interesting right now. So let's delete this. Everything seems quite interesting, and as you can see, right from this move to the from the this downside to the upside, you will discover that Euro USD has been filling all the other block and all the gaps left, except from this particular one, right? And as you can see, this is a very good order block. Why? Because it has that fair value gap that all of us can see here. So, and whenever you see any other block with fair value gap, it turns to be very what? Strong. And considering what we have here, right? This low created this break of structure. That low created this break of structure. Is it valid? Yes. Why? Because it swept liquidity. So this is a valid break of structure to us. Now, after this structure was broken, this market created this low. And if you have been on this channel for the first time, right, whenever the market breaks a structure and the next thing that it will do is to create a low before moving to the upside. But if that low did not sweep any liquidity, what will happen? The market will go up, come to take that liquidity before continuation to the upside. And that's exactly what the market has done. Now, this low right now, this particular low has now swept this liquidity here, because this market created this low created this higher high here, without it sweeping any liquidity. So this now is what we call fake break of structure. What happened right now? The market came back. Oh, sorry for that. The market came back to take out that liquidity, right? Now, this happened to be the strong low that we are seeing. Now, but because of what we are seeing at the downside of the market, we could see the market coming to take out all this liquidity before continuation to the downside. Why? Because this is the last order block that has not been filled on all this move to the upside. So let's have that in mind and start and still see, since we already have a low that have swept liquidity, what do we do? So in that situation, we start looking for more continuation to the downside, to the upside rather, having this zone in mind. So since we have this as our strong low, let's identify it as our strong low. So what do? Now we move more further to the downside to see if we are going to see any point of interest at this particular place, because after this low swept that liquidity, what happened? It now created this valid break of structure. It created this valid break of structure to the upside, and after that break of structure, it created this low at this particular place. What happened? Market, this low created this high, which gave us this fake break of structure. I'm running this top analysis so that you can actually know how to follow your market whenever you are dealing with it. So after this fake break of structure to the upside, right now market has come down, taking out all the internal liquidity, and it is now prepared to start moving to the upside. And since this guy has taken our internal liquidity, so we are going to be focusing on everything happening at this particular place now to look for opportunity. So since we have this area, this move for us to look for opportunity, now we start watching where are we seeing that fair value gap. Do we have any fair value gap? Do we have any point of interest? Now when you look at it, the market, the euro USD is covering every gap left, right, except from what we are seeing at this particular place. This, if let's identify it with a line, this 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 fair value gap, as you can see. Now since we have this gap here, what are we expecting? Let's change the color. What are we expecting? We're expecting the market to come and fill this gap left here, because the market just came in without filling it properly. So let's drop down to 15 minutes. Now when we come to 15 minutes, we can now see that we have a very good gap there again, which we are seeing at this particular place. So which we are going to now focus on this particular gap. Now, when we extend this, we discover that the market did not come inside it. And this is now giving us a good confluence that the market is likely to come back to it, considering that we have a very good order block at that particular place. Now, since we have this and that order block has a fair value gap above it, so on Euro USD, right, the first end, my first point of interest is now at this particular place because we have a very good order block there. And when you look at it, we discover that orders are filled already. So this is the first point of interest that I'm looking at. And remember, trading is reactive and not predictive. Always wait for that change of trend before making your entry. So if I'm targeting, I'll be targeting this particular high here. Let's identify it. I'll be targeting this high, which has given us what? Almost 3-to-1 risk reward. 1-to-3 risk reward rather. So, but in this situation, let's adjust a little. So in this, which is exactly 3-to-1 risk reward. So in this situation, this is my first point of interest. Then my second point of interest, remember, we have a gap that was left here, right? Which the market could decide to come and take all the internal structure before continuation today upside. So in that situation, I will also be looking at this particular place. Now, as you can see, these are just lows created internally after this external break of structure, right? The market could decide to come to take all of them. So in that situation, I will also be looking for another entry here. If the market decides to come down to take everything out, then this should be my stop loss below this low. And my take profit will be what? Going just above this. Now, remember, don't enter blindly like this because this is a heavy low, or let's just adjust it to our order block. But don't enter blindly because this is a very heavy stop loss. So what do? You always wait for that change of trend before taking that particular trade. Remember, 3-to-1 risk reward is very, very good in the market. So after that, you can now target the external high. So on Euro USD, these are the two setups that I have for the week, but you don't have anything to worry about. But if Euro USD decide to continue moving to the upside without coming to few these places to trigger your entry, you have nothing to worry about. On Wednesday, we still cover it for you. So on Euro USD, this is my point of interest. Then I have another one on gold, right? Now on gold, let's go to daily time frame. On gold, as you can see, gold has been moving to the upside. And by the way, if you have been on this channel for some time, I covered all this when gold came to this particular order block, right? I explained all the reasons why we should be expecting gold to continue moving to the upside from here. When gold was at this particular place, and after it broke this resistance turned to support, I explained all the reasons why we should expect more continuation to the upside from here. By the way, you can go to my previous video to learn so many things from our previous analysis, and also for you to have more confirmation that you are at the right place. Now, by the way, before we proceed, if you're not subscribed, subscribe, turn on the notification button, like, share, and comment, because your comment, like, share, and subscription and motivate us to create more educational quality videos like this. So let's proceed. Now, since we have this and we know that the market is going to the upside, and gold, after reacting from this daily order block, right? The market came to test this strong area of resistance, now turned to support, and the market is now still currently moving to the upside, creating series of high highs and higher lows. And when we have something like this, what do? We start looking for more opportunity to the upside. At least we are expecting this market to come and take out this high before another move to the downside. So since we have this, let's drop down to 4 hours. But before we come to 4 hours, let's go back to daily. On daily right now, you can see that gold is covering every gap, and only gaps left to be covered happen to be this particular one. And right now, currently, this other block that we have here. So let's drop down to 4 hours. Now, on 4 hours right now, we can see that this is the order block on daily time frame. So first of all, let's see if there's anything that we can see at that particular place. Let's move down to 1 hour. Now, on 1 hour, you can see that gold is trying its best to cover every gap left, right? Even this gap left here, gold later came back to cover everything. So let's keep moving. And here, we cannot see, okay, we now have that fair value gap here, right? So let's go to 30 minutes to see. Now on 30 minutes, everything seems quite interesting now. Now on 30 minutes, we can see that we have a fair value gap here with a very good order block at this particular place. So let's identify that order block. So let's delete this since we have already gotten a point of interest inside daily order block. This is actually how to get opportunities in trading markets. So now let's go to 15 minutes, and from what we are seeing right now, everything seems quite interesting. Let's go back to 30 minutes. Now, from what we are seeing right now, we can say that this thing is our strong low. Why? Now, as you can see, this low swept this internal liquidity here, right? So we are going to identify it as sweep of liquidity. And this low created this break of structure at this particular place. So this is a valid break of structure. Now, after this break of structure, what happened? After this break of structure, the market did not create any liquidity that needed to be swept. So the market used this low created before this move as a liquidity coming to take it out from this particular place. Are you seeing it? So this is a very good liquidity sweep. So in this situation, what do? This is now our strong low. So we are going to now focus on everything happening inside between here and the current level of the market. And inside this move, what are we seeing? We are now seeing this order block. And when you check from here, let's go to 15 minutes. When you check from here to this place, we can see that valid order block on at any particular place. Only on 30 minutes, we are seeing that valid order block. And this low right now created a valid break of structure at this particular place, right? And after this break of structure, what do we see? We are now seeing, let's identify this as our strong break, our break of structure. After this break of structure, we are now seeing this low being created, right? So this low now is going to serve as our inducement or liquidity. So we should be expecting market to come and take it out, come into our 30 minutes order block before more continuation to the upside. So first, I will be looking for that point of interest at this particular place. My stop loss just below my order block. And my first take profit should be 3-to-1 risk reward, which is going to come here. Then after that, I can now start targeting this external high. Let's quickly go to 15 minutes. Let me check something. Now on 15 minutes, we now have another order block here with fair value gap, as you can see. So in this situation, because of it is very close, we could see the market coming inside this place immediately. The market open and continue moving to the upside. But in this particular place, I will not be looking for any entry at this particular place because this is a very risky place to look for that entry because of we have this inducement below here. But trading is reactive and not predictive. You can actually look for that change of trend at this particular place. If you see it, you can take that trade, but it is very risky to take that trade here. Rather, I will be waiting for that particular setup at this particular place. But depending on what the market gives us, then we can be looking for that opportunity here. Now, let's go to 1 hour to check other things. Now, this particular place that we are looking at now, yes, we have a very good order block here, right? Remember, we are giving you buyers and points of interest because we don't know what the market is going to do immediately it opens. So while we are identifying these zones are the places you have to be looking for entry, because if you go through our previous video, you will discover that our point of interest is always 90 to 95% accurate. So, and if the market decides to come down to use all these internal structures as internal liquidity before continuation to the upside, then you have to be waiting for that movement at this particular what place. This is the third place I'll be looking for that particular entry. Just below my structure. And first off, I'll be targeting 3-to-1 risk reward just here. And after that, I'll be targeting this buy side liquidity. So on gold, these are my three setups depending what the market is going to give us. I will look for that entry here. If I didn't see it here, then here. But if the market continues going to the downside, you don't have anything to worry about. On Wednesday, we still cover and tell you what to expect in the market. So on gold, these are some of the entries that I am looking for. On USDJPY, I have another setup on USDJPY. Now, as you can see, from what we have on EURUSD, we're expecting more buy to the upside, and gold, we're expecting more buy to the upside. Though we both on GBPUSD, I think I'm going to cover it, but we are coming to that. Why are we kind of think, seeing all these things and validating it that is going to be going to the upside because of what we are having on our DSY. Now, when we go to DSY, we see that currently our DSY is creating series of lower lows and lower highs. Why? Now, when you come to our, okay, let's go to monthly. On DSY, we can see that this market is reacting at this particular what place, this breakout block, and then support turning to resistance. So it's reacting heavily here. Despite from what we are seeing, we are expecting this market at least to continue moving to the upside, because when we zoom out, we discover that this market is already in bullish movement. The market came down to take out internal liquidity before continuation to the upside. Now, since we have all this, And what do we expect? We expect the market to continue moving to the upside. Then on monthly, we can see that the market already have a gap that left to be covered. And today is the last day of the month, right? So this gap needs to be covered. This gap we are seeing here. And whenever you see market, any monthly candle closing like this, we are expecting a pullback to cover the week below before another continuation to the upside, if we are going to see that continuation to the upside. So this is the gap that we're expecting the market to cover before we start seeing any other move to the upside, which is going to make dollar to be weak, because DSY is where we identify the strength of the dollar. It shows the strength of dollar. So when we go to weekly, we can see that gap left. And considering how this weekly candle closed, definitely we will be seeing that move to the downside to cover those wicks. When we come to daily also, we can say that the market right now has something that it needs to take out, which is this low. This low that didn't sweep any liquidity before creating another high, sweeping the high side, the buy side liquidity. Look at it there, right? Yes, so as you can see, as you can see, the buy side liquidity is already taken. So we're expecting this market right now to come inside here before anything to the upside. When we go to 4 hours, we can see that this internal structure created is still intact. So we are expecting this market to come inside this particular place before we start seeing any other move to the upside. So this is giving more room for our USD to be little weak before we start seeing more continuation to the upside. So, and that open room for all these currency pairs trading against USD to at least still go to the upside before we start seeing any other continuation to the downside against USD. So coming back to USDJPY, what do we have? Now, when we go to 4 hours, or let's start from monthly, let's see how everything looks like. Now, when we look at monthly, we discover that this market is still creating, is still on bullish movement, but in that situation right now, we now have this gap left to be covered, and this gap left to be covered is tallying with resistance that's supposed to turn to support. Now, when we come back to weekly, we discover that in that particular place, it has not been tested, right? So we expected the market to come to it, and showing, given this right now, we can see that the market is covering every gap. Then we have a gap that is yet to be covered. Look at it, that particular place. We have a gap that needs to be covered. So having seen this, let's move down to daily. Now, on daily right now, everything seems quite interesting. Now let's delete this. Inside this place that we want the market to cover, we can now see that we have a gap there left to be covered. So let's identify it first, right? We have that place that needs to be covered. This is one. Then secondly, let's go back to weekly. Let's see something. Then on weekly, we have this gap that needs to be covered. And considering what we currently have on USDJPY, the market is currently reacting from this order block, right? This daily order block. And remember what I just said, daily order block is always strong whenever you are dealing with it. Now, but on weekly, you can see that the market is testing a very strong area of resistance. This resistance pulled the market down from this particular place for months. So you don't expect the market to just break it out. We expect a ranging market before this. And during that range, we are going to see down movement before we talk about breaking it, if the market is going to actually break it. So since we have all these things on daily, what do? Let's move down to 4 hours. Now on 4 hours, as you can see, the market is still creating lower lows and lower highs. By the way, on Wednesday and Wednesday, I explained all the reasons why we should be looking at what is going to happen at that particular place, which is this order block. Remember what I say, whenever you see order block on 4 hours with fair value gap, or daily or weekly, is always strong. And the market had already given us this move to the downside, which has given us at least 3-to-1 risk reward if you had opened this particular market. So let's see. Okay, yes, it has given us that 3-to-1 risk reward at this particular place. Congratulations to some of our viewers that utilize this opportunity. But currently, the market is ranging now. So remember, we are expecting more continuation to the downside. So what do we do? Now, on this particular place, we're expecting the market to react to come and fill. Inside this particular place now, we have a very good order block there. Look at it, right? Which has opened the door for the market to still come to the downside. But currently, the market is creating series of lower lows and lower highs. So we're expecting the market to at least sell to this particular place to give us this particular entry before we start talking about any other movement. So if this gives us this entry, we are going to be taking it towards to the upside, right? But if this market fell to come to this particular place to give us this entry and goes up to come to order block that I'm already seeing on 30 minutes here, right? Now we'll be taking this market. Now let's quickly look at what we have here before we start looking at the other entry. Now when we look at this, we discover that this high created this break of structure at this particular place. Later, the market came down, sweeping out this liquidity and giving us this strong high. And this strong high happens to have this particular order block. Let's delete this to make our chart clear. It's have this order block here that the market could decide to come to before any other thing. So if this market failed to come to the downside to trigger this, our entry at this particular place, let's bring it to trigger this, our entry at this particular place, then we'll be looking for that opportunity when the market first of all comes inside this particular place, because we are still expecting more continuation to the downside. So if the market first of all comes inside this particular place, we now open that market here targeting below. First of all, 3-to-1 risk reward, always good. Then I can target this low. So on USDJPY, this is what we actually have here. And let me quickly say this, right? Remember earlier before now, I said something that I will be talking about when the market is talking, where it is talking, and when it talks. Any opportunity that you see, right, that did not happen, that did not give you that during opening session of London session, closing session of London session, or opening session of New York session, please just avoid that. These are the two times that the market talks, right? Whenever it is giving us that entry, when you look at it, okay, let's quickly look at everything happening at this particular place, right? This entry right now that we have at this particular place, where is that for? Okay, that should be happening at for this 4-hour order block. Let's go to it. Let's identify them. Look at this. Now it happened immediately. Just look at the downside of the chart. It happened immediately. The London session is opening. New York session, as you can see, before we started seeing this move to the downside. Now, when we go to 1 hour, just look at it there. Are you seeing immediately it's opened? Now, the move to the upside, right? Where is it again? This move to the upside that we are seeing now, it happened immediately the London session opened. Then when we come to this particular place, you will also see that this move started immediately New York session open, right? So whenever you are getting that entry, if it is not during London section opening, remember what I said, opening or closing of London session or opening of New York session, please avoid the market unless you are trading Asian pairs that could also give entries during the Asian session like 2 a.m. in the midnight. So, these are the time that market talks. And where does the market talks? And I consider it valid whenever the market is talking during this time, during this London session or New York session, and it is now talking at my order block. When you look at this right now, you will discover that this language came during my this language at this particular place came during my New York session opening. So I needed to take this trade, right? When you follow it, you can go to your chart and check some of these things. This move right now, right, came this move to the upside came immediately. It was New York London session was coming to a what, to a close. So these are some of the things you can do. You can go to your chart, find out these things, and you can actually maximize your chance of winning in the market. So remember, if it is not talking or giving me that entry during London section or New York session, I'm not gonna be what, taking that particular trade. And if it is not telling me that during sorry, at the location of order block, I'm not gonna be taking it. So on this week analysis and bias on on USDJPY, this is what we have, and on EURUSD, this is the entries that we have. Let's go to 1 hour. These are the entries that we have. Then on gold, this is another entry that we have. So remember, trading is reactive and not predictive. So I'm wishing us a wonderful, successful trading week ahead. And thank you for always streaming and viewing our videos, and your like, your share, and comment. Thank you guys, and have a wonderful trading week ahead.